In today's video, we are going to uncover the secret of mastering the smart money concept, allowing you to trade like a pro and stay under the radar. Are you ready to level up your trading game? Let's dive right in. So the first thing you want to do is you must have an understanding of the smart money concept. So firstly, let's talk about what smart money is. Smart money actually refers to the big players in the market, such as institutional investors and professional traders who have access to more information and resources than the average retail trader. By understanding and following their moves, you can increase your chances of success in the forex market. So usually when you trade, when you are in the front of your chart and you are seeing price action, right, you agree with me that most of the times price tends to move in a zigzag manner. All right, so what is actually pushing this? It is the smart money. All right, because you and I, we don't have enough capital, we don't have enough money to push price, right? So this is why it's important to stay and trade with the smart money. Okay, so basically each of these zones, which we call order blocks, or which we call supply and demand zones, each of these zones have some level of orders in them. Now, in one of my recent video, I talked about liquidity. And what is it? Liquidity is simply money in the market, right? So basically this smart money, what they do is they trade with liquidity. And you cannot really make money in the forex market except you understand the concept of liquidity, whether you are a termed smart money trader or you are a retail trader. No matter the strategy you are using, liquidity is very, very important. For instance, in cases like this where you see choppy markets, something is happening, it's called a liquidity build up. All right, so whether you are a trend line trader, you will need this information. It is very important. Okay, so basically once you understand that, okay, this is what the smart money are doing, you have upper hand in the market. So how then can you identify the moves of smart money? So very, very simple. You need to learn to identify the smart money moves, and this is where you are going to learn most of the stuff in this video. Now that you understand what smart money is, let's discuss how to identify their moves in the market. We'll go over some key indicators and patterns, things to look out for that can help you spot when smart money is making move and how you can use this information to your advantage. The first thing we'll talk about in this particular section is inefficiencies. So you agree with me that something like this, when you see something like this in the market, right, price and the price candles ought to close each of these each candles each time it's formed, right? But at times you find out that price tends to leave a little gap, and this gap is what we call the inefficiency, is what some call the fair value gap, right? And this is one thing you must understand. So anywhere you see this is an indication, especially on the hard time frame, it's an indication that price that the smart money are involved in the move, in that particular move. All right, so I'll give you an example of what I'm trying to say. So for instance, looking at this zone, you will see that price have been moving upward, all right, and all of a sudden price changed direction, going to the downside. Right now, in the process of going to the downside, we have what is called the change of character. All right, and the change of character looks like this. And this is where you need to really pay keen attention, all right, because I'll be talking more on change of character, because most of the smart money traders, they don't have understanding of what the smart money change of character is. right? So basically what you want to understand is, once you see the IFC, which is institutional funded candle, what it simply means is this: the IFC candles are candles that the institutions are actually fully involved in. These candles usually either they sweep liquidity or they cause a change of character. All right, so like this, you can see this. All right, this candle tends to sweep liquidity, and it is called now look at this. Now, before this was filled, you will see that there was an inefficiency in price, right? So this inefficiency in price is being sponsored by the smart money. So once you have understanding of this, you will be able to know, okay, what the smart money's intentions really are. All right. So in this case, one of their intention is to switch price action. Why? Because it had actually caused a liquidity sweep right here. So all these are bunch of trendline liquidities which have been swept. All right, so all these are liquidities that have been swept. So also you can see immediately that happened, the next thing you want to look out for is the change of character. So let's talk about change of character. So change of character is the first intention of the market changing direction, and this is where most people get confused. So we're going to use this zone as a case study. All right, now where, if I may ask, where is our change of character? I know some of you will say our change of character will be here, some will say will be here, some will say will be here. Just let me know in the comment section where you think change of character will be. All right, you see, change of character and so on, right? But don't worry, I will show you a very simple way to identify change of character. Now, this is not a change of character. This is not a change of character. We don't have a change of character here. All right, so let me explain why those areas are not change of character. It's simple. You see, immediately there is a sweep of a particular zone, usually a zone that is equivalent to a break of structure, which in this case is this. All right, automatically we want to take our area, our change of character, to be this. So this will have to be our change of character. All right, this would have to be our change of character, and usually this is going to be the external change of character. Now, why as price get moving up, another levels of change of character are being formed, and which of these levels? These are the levels. We have a sweep, right there. All right, I have a sweep right there. This is not a change of character. Don't mark this as your change of character. You know why? Because you see, this is just a single move. Okay, it's a single move. Why? Because you see this candle, a lot of candles closed inside this candle, so that's not regarded as a valid pullback. Okay, so we have another push up here. Which can be equivalent to a break of structure. All right, which is equivalent to a break of structure. Now with that, we have that as a break of structure. I know most people, you know, they want to get involved in the market very fast, right? And they could be marking these zones as change of character. All these are not change of character. So based on what I just explained, our change of character will have to be here. So this will have to be the change of character. But what happened? Price came down and pushed up, failed to break this low. In other words, this change of character never happened. And what happened? Price pushed up again, doing what? Breaking a recent high, which is this high, right? Which is this high, which means we have our BOS. So automatically our change of character will shift from this zone. So we have our high probability change of character here. This is our high probability change of character. You know why? It's simple. The reason why the high probability change of character is simply because this was the move that was responsible for the sweep. Remember, meaning that the smart money was involved in this. Look at how huge that candle was, and look at how huge the change of character candle is. So this is one of the ways to identify that, okay, the smart money are actually involved in this. All right, so automatically, what can we see? We can see inefficiency. We saw inefficiency of price. So after the change of character, which is this candle, and another candle formed, what happened? Price retraced back into the 50% of the IFC candle. So automatically, if you know how to take trade entries based on fair value gaps, this is where you place your stop, and your entry have to be around the 50%. But if you don't know how to take entries based on fair value gap, you simply wait for the supply zone, which is going to be this. So this is literally the supply zone, right? So you just have to target the recent swing point, and this is the recent swing point, and we have liquidity formed at these areas. So that's basically where you want to target. So that's about 1 to 7 risk to reward ratio. And for me, I would prefer taking my target this first point. Why? Because most of the time price might want to build more liquidity. So what happens is price will just come down and react and push away. Just like this case, there was a little bit of a sweep here, right? But you see, almost equal. So we regard this as equal lows because this is liquidity as well. Now, remember we marked another zone, which is this zone, right? And what did we call that zone? We call the zone our order block, or we called it our supply zone. Right now, I said if you don't know how to take entries based on fair value gap, you simply wait for the order block, which is this particular one. And what can you see? You see that immediately price comes in, you see that there was a massive rally down, a massive push away, with other institutions getting involved. So the smart money, the banks, the big banks, they are literally involved in this price action. You see this? So you will become invincible to your brokers, you'll become invincible to the FX market if you can understand this sincerely. Right now, how can you implement this on the lower time frame? Now I will show you a brief example. Now we have our higher time frame mitigation here, right? We have our higher time frame mitigation. So this area becomes our change of character, and it's going to be our change of character simply because it has swept a recent high. So sorry about that, there has to be a sweep, because this is the high probability zones you want to look out for. All right, these are the high probability zones you have to look out for. So it is important that as we explore these proven trading strategies that incorporate the smart money concept, you should be able to understand what some of these concepts really are, right? So now there was a little illustration here, right? So after this change of character, there was a mitigation of the hard time frame zone. Now this hard time frame zone could be your 15 minutes, could be your 5 minutes, if only you are taking trades based on 1 minute time frame and 30 seconds time frame. Otherwise, 4 hours and 15 minutes is fine. So we have this tag already, and I already explained this on the charts. Right, so we have a push up. So this, we have a push up which is equivalent to a break of structure, and we have this low which is our change of character, our actual change of character zone. But what happened? Price never came to take it. In other words, we are still bullish, right? There is no first intention of price changing direction. So what happened? Price push up and create another low. Now most people will be taking this as a change of character, and this is where most of you actually get it wrong, right? This is not a change of character. Why? Because this low never did anything, never took a previous high, and we now have another high form, took out this high, took out this high. So we have another sweep here, and this area becomes our change of character. Now this is not your change of character, right? And this is your change of character. We have our change of character there, and we have our sweep right there. So you can see how complicated this can be, but it's quite simple. All you have to do is to have an understanding of where the change of character is, where the smart money have actually placed their orders, have placed a lot of moves on, right? So basically you just take your trade from that supply zone and you will be safe. All right, so let me show you an instance on this particular one before we call it a day. All right, so in order for you to actually develop a winning mindset on this, you must first of all have a total understanding of price movement in these areas. All right, so once you have an understanding, you just have to do a simple rinse and repeat method, and you are good to go. All right, so after the hard time frame mitigation, this is the hard time frame mitigation. Let's say it's 5-minute mitigation. So we have our sweep here, right? We have our sweep right there, and we have our change of character. This is not your change of character. This is not your change of character, but rather this zone is your change of character. So after you understand that, okay, this is your change of character, you see the momentum that this candle has, meaning that smart money are actually involved in this move, right? Meaning there are lots of others here. So when you trade with the smart money, you will actually be safe. All right, so what happened again? Price went up to do what? To mitigate the supply zone, right? To mitigate the supply zone. But we are going to the 1-minute time frame now, so that I will explain to you how you can, price is fractal, so I will explain to you how you can become invincible, once you have understanding of this method. All right, so the first mitigation happened with this candle, right? And price pushed up. Most people will be looking for, taking these areas as change of character. This is not your change of character. All right, so we have a further sweep up. We have sweep up. This is not your change of character. I know most of you will say, oh, this is a change. No, it is not. This is your actual change of character. Why? You can see that the smart money are involved in this. All right, so automatically this zone becomes your point of interest. This zone becomes your point of interest, and we have some liquidity formed here, and we also have smart money trap here. This is a smart money trap. Now, how do I know that is a smart money trap? It's quite simple. All you have to do is to understand all of this, and you are good to go. You see the momentum that price used to come and take everything before it tapped into that our actual point of interest right there. This is one of the way to know that, okay, it's actually a trap. And you can see how nicely price rallied away. You just imagine catching about 1 to 10 risk to reward ratio per trade per day, and like maybe 3 times in a week or 4 times in a week, right? You can literally be invincible. All right, so basically That's it, folks. By mastering the smart money concept, you will be able to trade like a pro and stay under the radar. Don't forget to like this video, leave a comment with your thoughts, and subscribe to FXTD Academy for more valuable forex trading insight and strategies. Happy trading and peace.